Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. So as you can see, yes, the market shown the upward action against the United States dollar across the board. So mostly the major reason was, as investors thought that the comments from the Fed was a bit more dovish, especially concerning inflation. So this put the shadow on a further perspective of rate hike in 2017, because by the Fed fund futures rate before the statement was slightly more than 50% probability of the rate hike in December. After the FOMC meeting, the probability has dropped below the 50%. So some analysts think that market's a bit overreacted because they just think that the Fed makes the fine tune of the speech to reality, and actually they haven't done something really outstanding. Mostly they correspond to the situation that's indeed right now exists in the markets. But anyway, as you can see, markets react mostly negatively in terms of United States dollar, and we see the upward action on the dollar-related currencies, our favored euro currency, Great British pound. So on the euro currency, guys, market actually has completed our destination point. So take a look at the weekly chart of the euro currency. You'll see that market has touched our major fib level, 1735. That was the destination point. So already makes the wash and rinse, taken out of this top. Also, as we said, that market, if even any retracement here will start, market probably should taken out of stops above this top. That indeed has happened already. And also take a look that this is weekly overbought, guys. So that is some kind of the Napoli bearish stretch pattern in the weekly chart. That's why this is the moment where we could keep an eye on the possible bearish patterns on the daily chart, on the intraday charts, because here at least moderate retracement could happen, but even 3 bounce here, 30% bounce will be significant distance for daily trading, for intraday trading. That's why, as I said, the euro currency right now we will be watching for possible patterns, bearish patterns on the daily chart and the longer term. Since this touch just has happened, so we don't have yet any patterns on the daily, but probably they should appear maybe on the current week, maybe on the next week. On the Great British pound, guys, that we will take a look today. So this upward action has happened, and here mostly, although we have some doubts that really maybe market will show some deeper retracement, some kind of the ABCD, but still market is following to normal behavior, because as we said, here's minor target, and that's why the more logical here is minor retracement rather than some deep ABCD pattern. Indeed, this has happened by the FOMC results. This market has moved up. So market is not at the overbought here and has really free space to the final target. So here we have target around 132.50 area. So this will be ABCD target. And take a look, guys, that's also 1618 extension of this ABCD large pattern. It's also, of course, the 1618 extension of the large weekly butterfly we have on the weekly chart. That's the next destination that market should follow. So one comment here, so pay attention to retracements, guys, because take a look. What is more important for us right now is that here response to the 618 target already has happened. So deep retracement had been done already. That's why here market should turn to the extension mode. So that was extension, retracement, extension to the target, retracement, and it's extension to the next target. Next target stands, as I said, here. That's why within this swing, we should not get too significant retracements, guys. That's why if any very strong retracement started, it will tell us that something is wrong with this upward target, this upward behavior. But right now it seems very reasonable action. Here, as you can see, market has significant upward candles here and here. So with even some kind of the tail closing here and here as well. So that is good sign for the upward continuation. On the 4-hour time frame chart, guys, we probably will get the butterfly as we have discussed yesterday. So that was the concern, whether we will get either 3 drive-by or maybe this butterfly, depending on what direction market will choose. This acceleration has resolved this riddle, and here is butterflies forming. The first destination point for the 127 stands at 131.75 approximately. So also we have inner ABCD pattern. And what is more interesting is that 1618 stands precisely at the same area, 132.40, 132.50 area. That will be the butterfly pattern. Should be completed also in the same target as the daily extensions. That's why it seems that in the current situation we see a really fast acceleration. As you can see that CD leg is much faster than it should be. So here we could keep an eye on some levels where we could think about taking the long position. First level is 131.13 with 3 support, and next level is 130.90 confidence support. So you can see this combination on the hourly chart. Hardly retracement will become deeper because market is not at the body, as I said, on the daily, and major retracement already has happened. This means that retracement probably should be small. Also here some kind of the previous top, as you can see. So that's 2 levels that you could watch for if you would like to go on. That's what we see right now on euro currency and the Great British pound. Let's see how the situation will develop here.